Well, hey friends, welcome to the live kickoff for our investing challenge called 6 months to 7 years. So over the next 15 minutes or so, we're going to walk you through what is this challenge and how can you participate and how might it radically change the way that you think about investing for whatever outcome that is. So let's start with a little history first. Years ago, I learned about this guy named Jack Bogle. Jack Bogle is the founder of Vanguard and specifically a product called an ETF or an exchange traded fund. The idea was simple. It was that humans just are not really good at picking stocks. And when it comes to building investing wealth or investing accounts, a lot of people, the place that they go to is they go to buying stocks or buying baskets of stocks or trying to manage this. And Jack said, look, the math is really clear. Humans are not really good at that. So instead of trying to buy stocks and match the market, so the market being the S&P 500, the idea was, well, how about you just have vehicles that allow you to participate in the whole market? And the exchange traded fund is a way that you and I can be active as investors and buy a basket. He would say buy the haystack rather than the needle, but allowed you to match the performance of a broader market. And so there are now ETFs that track the entire S&P 500 or the Nasdaq 100 or the 500, the Nasdaq 100, specific sectors and so forth. But it's a way that you can be really effective investing, and this is really taken on almost a life of its own in the way that people invest. This is one interesting innovation of late that is going to lead us to where we're going to go. The second one was these two guys. So this is Vlad and Baiju, and Vlad you will have seen more recently. He's the co-founders together of Robinhood, which came online as a broker that allowed self-directed retail investors a way to have access to investing products that they were either too expensive in the past or just outright didn't have access to. And they coined a term. The idea was that we're going to democratize access to finance. And in a lot of ways, they've really done that. They've really disrupted a lot of how people think about investing with a caveat. So the caveat is that they've given a lot of access to new investing products that could be really great. What they've not given us is a lot of skill. And that speaks both to the reason why Jack Bogle would say, hey, humans aren't great at picking stocks. And these guys would say, well, let's try. But specifically, what they brought to bear was greater access to a product that is related to stocks, and that is options. So that leads us to where we are in this specific challenge that we're going to do. So hence Miiflo. So what is Miiflo? Miiflo is a platform that comes alongside self-directed investors and helps tap them into a new investing playbook, a playbook that has been around for quite some time. It's used proficiently by successful hedge funds and dealers and market makers, but has largely been inaccessible to self-directed investors unless you've spent a significant amount of time building the skill. And it's just hard to have the skill to do that. But the idea of hearing from Jack and seeing the guys from Robinhood gave us an idea years ago of could we possibly build a platform that would allow not just access to this type of investing playbook, but also could make that easy so that investors could get a better outcome. And so that's essentially what we're going to talk about for the rest of this kind of launch is what kind of results could we achieve if investors stepped into a new investing playbook alongside Miiflo and learned how they could do better as self-directed investors. And when we talk about like what kind of results, well, let's kind of set the benchmark. Okay, so when we talked about Jack Bogle, we said, hey, the benchmark S&P 500 is the one that is used for almost everyone's retirement accounts or investing savings. And this is essentially the curve. If you were using investing as a way to save for retirement, for example, you would use this math. And this math says that I'm going to look to average about 6.7% each year. That's inflation adjusted. And if I save/invest about $23,000 and change every year for 35 years, then I could have $3 million at retirement. Again, that's $23,000 a year deposited into an account growing at 6.5 or more per year to get you to 3 million, which is kind of the bogey now that is suggested that people strive for when it comes to saving for retirement. The problem with this is, one, this assumes that how things have gone in the past, it'll continue. And it also assumes that people have $23,000 to save/invest for that period of time. I mean, we live in a world right now where half of Americans, if they had a $500 emergency, they would put it on a credit card. So this doesn't really work that well. It is the playbook that people are familiar with. It's a playbook that feels safe, and it's a playbook that is really, really expensive in terms of getting to your outcomes. But let's just imagine that we could turn a couple dials. And so there's two dials that if we turn these two dials with respect to the way that we approach investing, we can get really, really different outcomes. And the first one is the dial of yield. All right. So we know this math. That makes sense. I'll understand that. However, if let's say that we can get the return up to 25% as opposed to 6.5% or in change, we wouldn't need 23,000 a year to get to 3 million. We'd need $300 and change. And in fact, if we put $300 into an account and it grow 25% per year, and we did that for 7 years, we'd have $5,000. And that is part of what we're talking about here in this challenge of give us 6 months, we'll give you 7 years. So how does somebody get to that? I mean, you'll ask some people and they will say, well, 25% is just not attainable. Except it is. It is. It's just not attainable in the playbook that most people have access to. So let's talk about playbooks that people have access to and what they're looking for. So one, 45% of Americans want a different investing playbook. This existing playbook requires $23,000 each year. We realize that stepping into new playbooks can be daunting, but Miiflo makes it easier to step in and try a new playbook. And what's this playbook do? So it is a playbook for higher, lower, and sideways. All right. So, what do I mean by higher, lower, and sideways? Well, let's just look here. This is a chart of the S&P 500. So this is the benchmark of everyone's retirement is used. So whether they know that they're doing well or not, they're going to use the S&P 500. This highlighted area is essentially this year. It's a little bit more. It's some of it in December, but we've essentially been 3 months, almost first quarter of the year, and we've been in about a 3% range. So we've not really gone anywhere. In fact, if you'll notice this pink line here, so that's the average weighted price of the S&P 500 for the year. We're below that price. We're also, if we go back to June price right here. So right where that starts, that is the beginning of the year. You can see we're below for the year. So if you are in the traditional investing playbook that requires things to go higher to make money, that means that you've lost money so far this year. Not a lot, but it's been about 3%, but you've lost. Well, what happens if we don't stop here? What happens if we continue to go lower? That means that you're going to see a contraction in your accounts. And this is essentially where the 6.5% comes from, is that, you can see clearly there's a lot of years where the S&P does really, really well. In fact, we just came on the back of several double-digit gain years. Really great. What we find is that when the S&P doesn't have a double-digit gain, it typically has a double-digit loss. And, that smoothed out over long hauls, what gives us the 6.5%. But what if we could get into ideas that benefited regardless of what direction a stock went? And so this is essentially the playbook that Miiflo offers. And so let's just look real quickly. We're going to jump in and look at some ideas that have been generated, and these are for tomorrow. And I want to talk about how different these ideas are relative to things that you may have seen before. So these are all different types of investing ideas, and they're using something called multi-leg option strategies. So they are using options around a specific stock or exchange traded fund, and they are building kind of pockets of profit based on the expectation of what that specific stock or ETF is going to do. So let's just look, and you'll notice there's different colors here. It's because they're all based on different behaviors of different products. This one here with CF, this is a sell iron butterfly. So this essentially means that here's a stock that has gone up for quite some period of time and now is likely going to stall and go sideways. Well, if it stalls and goes sideways, in fact, we could go look at this chart and just see what this looks like. Okay, and let's get to this chart over here. Okay, so here's CF. It's gone up, doing really well. However, we know that stocks don't go up forever, and the next most likely behavior after they've gone up is to go sideways. Well, if you buy it right now and it goes sideways for several weeks, there's not a way for you to make any money. In fact, it may instead go like this before it goes back higher, right? Or it may go here and then kind of do a stall like that. Either one of those is what this specific strategy is meant for. It's meant for it to go sideways. And this actually benefits if the stock goes sideways. Remarkable. It gives you a different way to approach investing so that you don't have to have just something that goes up to grow assets. Let's look at another one. This is DAL. Okay, here's one that's actually been going down for quite some time, but it's back into an area where we've seen some inventory before. And that's what this histogram is here over on the right. That's historical trades at those prices. So we're kind of in this like larger range and kind of choppy and sideways. Well, this specific strategy, this is an iron condor, builds an idea such that, we'll look at the, all right, so this is using 4 option contracts, and as long as we stay between 71 and 51, so this really, really big range here, for about the next 2 to 3 weeks, this makes money. It doesn't even have to be like up or down. It just has to be in this range. And you can see that range is much wider than where we are currently. This is a different type of investing playbook. It's an advanced playbook. These are called complex options, and historically they've been really, really challenging for people to enter because if you see over here, it says option legs. So these are 4 products that are all entered at the same time that constitute one investing idea. In the past, you would have to go and select each of these products and bundle the whole idea and enter them. That could become really challenging, and even knowing which ones to enter. What Miiflo does is it finds all of those. And then let's say that I want to enter this one. I can literally save it. I can stage it. I can put in a quantity that I want to do and then execute. And then I'm in. Now this is using a practice account, which we'll come back to here in a second, but it's giving you an idea of how this is supposed to work. Now that this is in, you can see there's information about how this stock is supposed to behave and that it's within a specific range of prices that's giving you feedback. There's also notifications that will come in along the way to help you manage this idea so that you don't really have to think about it a whole lot. It's not like it's an obsessive thing that you're having to check all the time, but it will ultimately give you alerts and notifications whether, hey, let's say that DAL gets outside of this range. Well, then we would need to close it because it didn't work out. But as long as it stays in this, we can do well. All right. So this is what this new playbook specifically looks like, and how Miiflo also engages in this is it's not just a playbook for higher, lower, and sideways, but it's a playbook that uses shorter hold times. The current existing playbook is based on buy and hold, and so you'll get really consistent information whenever things go sideways or things go lower. People will say, well, just stay the course. We know that markets will ultimately go higher, which they're not wrong. But that means you're in a holding pattern. Well, the holding pattern is going to be more expensive. So if you're able to get into a playbook that is more nimble and one that can go high, can deal with higher, lower, and sideways, now I can actually be growing assets while the broader markets are going sideways. But then at the same time, there's another piece of it. It's not just about the strategy. it's really about two other key pieces, and this goes back to the other dial that we're turning. So when we talked about that there are two dials to turn, so one dial is a different type of strategy and a different type of investing idea that can give you those results. But that only really works if we work on the other dial, and that is a playbook that teaches you risk management and capital allocation. So what do we mean by that? We'll go back here to the dashboard and we're going to take a look at a couple different pieces that are part of the Miiflo platform that give you some really good information around these things. Okay, so here is a dashboard for managing your investing ideas, and we call them drips, right? So these are drips, these are strategies, and you obviously get feedback based on what the balance is doing over time. But then also over here, there's a allocation chart, because these ideas kind of fall in different buckets. But a piece that most self-directed investors are not taught is, first, how to allocate capital relative to a specific strategy. So our model helps kind of build some conditions to help you know where and when to allocate capital, or whether you're under allocated in capital and whether you're over allocated. It can be dangerous even if you have a good idea, but you're over allocated in it. Miiflo will help you tune that. So if I look at this specific account, it's telling me, oh, it's actually yellow because I have too much capital that's available. So it's encouraging me to deploy that. And then it's going to say, oh, where am I going to deploy that? It's in these two other buckets, which are credit drips or debit drips. So all of these types of strategies we call drips, and they fall in two different kind of categories. So one over here, so these are all drip types. Some of them are what we call credit drips, and some of them are debit drips. Now, it's not really important that you understand that right now, but there's different probability curves based on these different types of whether it's a credit drip or debit drip. And so based on the different probability curves, it would suggest that you allocate according to the probabilities. Debit drips typically require less capital, but they can give you a much higher return. However, they're less probable. The credit drips can provide a more consistent amount of return. However, they're going to absorb more capital to be able to do that. So we've kind of figured out a ratio that works really well that can get us in a spot where we could achieve potentially that 25% or more per year. And that's built on looking at where we are relative to this allocation wheel. So, every day a Miiflo user comes in and looks and says, oh, based on where I am, here is what I would look to allocate toward. And it even has some potential ideas based on what they've saved recently and then what they're underweight in. So in this case, we recently did a credit. One was what we had entered here. It's saying, oh, well, there's some debits, and it's highlighting a couple in here. And I can even filter based on debit types to see. And obviously there's a lot here, right? So how do I figure that out? This window kind of tunes it based on this account and gives more, gives more specific instruction on how to approach that. All of that leading to a way that I can look at this and have an overview of where I'm going and look at the allocation. And then the last piece of it is this little number here in the middle. This is what's called a flow score. So think of it like a credit score as an investor. It's giving you feedback on actions related to that second dial of how am I managing things like risk or capital allocation. So if we look here in this notification drawer, and let's see, you'll notice that I have a couple risk notifications that I've received. So if I have a drip that has been flagged for risk, you can see I have one right here that's flagged for risk. If I deal with this drip and exit this, so what's happened is it's past one of the prices that it reduces the probability that's going to work. I should exit that. Now, what's the problem with that historically is that means I'm gonna take a loss. Currently, this one has got $330 negative. Okay, so if I exit it, it hurts. It's not fun to take a loss. However, I've preserved capital that I can put into something else, and this is good risk management. So if I get flagged for risk, yes, my profit and loss is going to go down a little bit, but my score is going to go higher because I've demonstrated that I'm a better self-directed investor. So this is where, just another example of where, for Miiflo, what we're trying to do is to give you the tools to help you appropriately turn the two dials so that we don't have to have this type of outcome, but we could have this type of outcome. Okay? So, where do we go from here? And what's, the objective of this investing challenge and what we're trying to do? So we, again, are trying to figure out, well, what kind of results could we achieve if self-directed investors stepped into this playbook and used this platform as a way to guide, and realize that this is very new for many people. So let's practice, right? Rather than like jumping in the deep end and trying to go after this stuff, real time, let's practice this and let's spend, if the classic playbook looks at 35 years as a horizon, well, what if we used 6 months to learn how to go essentially from like Miiflo 0 to Miiflo Hero, and then see what kind of results we could achieve over 6 months. So how could you do that? If you're on the Miiflo platform, on the homepage, you can go and get started for free. And we have a couple different plans, but I want to highlight this one over here, which is just a practice account. So it's just $25 a month, but there's a free month on top of that. So over the 6 months, that'd be like 5 months, it'd be $125 to learn this new investing playbook would be your investment. And then at the end, whoever has the highest percent return over the 6 months, we're going to give $5,000. And that would represent $300 invested every year, seeing 25% return compounded over 7 years gets to about $5,000. So that's kind of where the 6 months to 7 years idea comes from. So here's the steps: get the practice account, learn how to go from Miiflo 0 to Miiflo Hero, and get the chance to win $5,000, or effectively 7 years of progress in this new playbook. What's the worst is that you learn that there are different playbooks that exist out there. You're going to learn risk management. You're going to learn capital allocation, which are critical for whatever investing playbook that you're a part of, whether it's a multi-leg option and complex option playbook or a traditional ETF and stock playbook. Those skills will still serve you well as you look to get better outcomes in your investing. So 6 months to 7 years. This is the kickoff right now. So we're not starting yet. We're going to spend a week kind of getting everybody ready. So we're going to have additional little short sessions over the next week or so. And then next Sunday, or actually the next Monday, which is a week from tomorrow, is when we'll actually start the competition. And that's when we'll actually start building and saving ideas and tracking them and going along. Now, one of the questions I get or feedback I often get is like, hey, I don't have money to invest. I don't have time, because there's this perception that to be a successful investor, you have to spend a lot of time doing that. And this is also part of what we're trying to do for you, is present ideas that already have really good structure and really good probability to them. Help you understand, okay, what's driving that? What's the premise for that would lead for that to even work? But then freeing you from having to do a lot of research. An effective Miiflo user in our head spends 10 minutes a day at most using Miiflo and picking new ideas or managing them. This is not a full-time job. This is not something that's supposed to be super active. It's something to work on the background. Much like most traditional investing playbooks look right now, is that they kind of happen and people don't really pay attention to them. They may pay attention to them at certain times, but not necessarily a day-by-day check-in. Our idea is that if you could responsibly respond to email, the notifications that come out, whether in the platform or via email, that give you updates on your drips, then you will do great. So we'd like to invite you to be part of that. Any questions you have, feel free to put comments on the video or send email back to us, and we'll get you up to speed. Also, we're going to be doing, again, additional short videos throughout this week just to kind of prep you for the different components of the platform so that we're all ready to rock and roll a week from Monday. All right, gang. Appreciate you, and let's see where this goes. Cheers.